In 2022, the Canadian real estate market was an absolute roller coaster from record highs to record lows. So in 2023, will the Canadian real estate market be the drop of doom or just a slow gradual decline into the abyss? If you're new here, my name is Matthew Pfeifer. I'm a real estate agent from Regina, Saskatchewan. That's my trusted assistant, Matilda. This is my Bald Prairie Real Estate 2023 Canadian real estate market forecast video. We're going to go through all of the expert predictions that I've gathered and see what they're expecting for the Canadian real estate market this year. And I'm going to give you my predictions, what I think is going to happen. We'll go back in a year from now and we'll review to see who was right, who was wrong, and how close everybody got. And at the end of the video, I want to give you some trends that I think you should keep an eye on. These are things that I'm going to be keeping an eye on that's going to give us an indication what's going on in the Canadian real estate market and potentially where things are heading. But let's start off with another terrible bad dad joke. There was a biologist and a physicist that were dating, but unfortunately, they had no chemistry. If you have a terrible joke that I can use in a future episode, put it in the comments below. We're going to start this off looking at all the expert predictions. I'm going to go through them one by one, but I want to start off by saying, please do not base your decision to buy a house or sell a house on a forecast going right. So if these predictions have to be correct for your decision to buy or sell a house to be a good one, please don't do it. It's not a good plan if something has to happen for it to be a good decision. Use these for entertainment purposes. And like I said, we're going to go back and review these at the end of the year because a lot of times these forecasts end up getting revised multiple times. I think most of the experts revised their predictions 4 times last year. Okay, here we go. I've got them all written down and let's go through them. Starting at the top, TD Bank is expecting the prices will be down year over year 11%. RBC is expecting prices to be down 8.5%. The Canadian Real Estate Association prices down about 2.5%. Royal LePage expects prices to be down 1%. REMAX expect prices to be down 3.5%. Fitch Ratings is expecting prices to be down between 5 and 7%. Interesting, last year they expected prices to be up 5 to 7%. As you can see, the banks, the real estate companies are all expecting home prices in Canada to decline in 2023. That was the experts' predictions. But what do I think is going to happen this year? I'm going to give you my 6 predictions for the year, and then we'll review them next year and see how close I got. My first prediction is that in 2023, there will be fewer homes sold in Canada than we saw in 2022. Now, everybody talks about how bad 2022 was in the back half of the year, and it was a very weak back half of the year. But even still, when we get all the final numbers, and they'll be out fairly soon, they just weren't out before I put this video together, 2022 will likely be the 3rd busiest year all time in Canadian history. So even comparing to that year, if we're close to 2022, it's still going to be a relatively busy year in 2023, but I don't think we're going to get to 2022 numbers. The next prediction I'm going to make is the hot product we're going to be talking about this year is condos and townhouses. And by hot, I don't mean we're going to see big price appreciation. I just think it's what we're going to be talking about the most because I think you're going to hear an awful lot, especially early in the year, about the Toronto pre-construction market. I'm going to be talking about that in a few minutes in my trends segment here. And there's some uneasy news coming out of what's potentially shaping up in the spring for that Toronto pre-construction market, but also the affordability that is offered by condos and townhouses in a high interest rate environment that we're in right now where mortgage payments are very high. The overall lower price of condos and townhouses, I think, is what's going to make those attractive to buyers in 2023. My third prediction is the hot market this year is not going to be Toronto, Vancouver, Ottawa, Montreal. I expect all of those, like the national trend, to be a downward trend in prices and activity. But I'm expecting the prairies specifically, so Calgary, Edmonton, Regina, Saskatchewan, maybe you can throw Winnipeg in there. Those areas are going to see far less declines if we continue to see the market decline. And I think that's where you're going to see the busiest markets propped up predominantly by stronger local economies. And then I also think you're going to see, to a secondary extent, the Maritimes are continued to be strong as well. Again, because of stronger economies there and the lower vulnerability for both the prairies and the Maritimes, because of lower house prices, they're less impacted by higher interest rates. When interest rates go up in Toronto, that might increase a payment $500 a month because of lower prices. In the prairies and Maritimes, it's going up $50 or $100 a month. My fourth prediction is going to be talking about inventory levels. That was something that we talked about a lot last year, how low in inventory a lot of markets were. We're now starting to see across the country, most markets have trended away from a seller's market into a balanced market. There are a few that are a buyer's market. Now, for a quick refresher, when you have 3 or less months of inventory, that is a seller's market. From 3 to 6 months of inventory, that's considered a balanced market. When you have more than 6 months of inventory, that's considered a buyer's market. How that is calculated is you take the total current number of homes available for sale divided by the previous months of sales. That's going to show you just basically how busy that market is. Now remember, just because the citywide number is say 5 months of inventory, that's what it is here in Regina right now, that doesn't mean what you might be looking for or the neighborhoods or the price point is in the same market conditions. So again, looking here in Regina, if you're looking for a single family home on the east side of town, well, if your price point's around $400,000, then there's less than 3 months of inventory. There's not much available for sale, and we're still seeing pretty strong prices and even bidding wars on that, even though this citywide number says we should be in a balanced market. So look at what's going on in these specifics for what you're looking for to see how competitive that market is. I think overall, though, the country, we're going to continue to see it in a balanced market and potentially trending to a buyer's market, depending what happens in the spring. And again, we'll talk about that in the trend section coming up. Prediction number 5 here is about the rental market. I'm expecting the rental market across Canada to continue to be competitive. In 2022, and especially the back half of the year, it was ultra competitive. We had bidding wars in Toronto, for example, on apartments for rent. We saw nearly 1 million people call Canada home in just 2022. That put a lot of pressure on the rental market. And of course, with higher interest rates, a lot of qualified buyers elected to not purchase, or they were no longer qualified to purchase all of a sudden and have chose to enter the rental pool again. I do expect, though, in 2023 that we are going to see a little bit of sanity return to the market, because we're going to see potentially still 500,000 new Canadians coming to Canada. That's a massive number, but obviously far less than the million we had in 2022. And I do expect that we are going to see some of those buyers that were sitting on the sidelines in the rental pool start looking towards purchasing, which is going to relieve some stress on the rental market. But I do expect rent prices to remain at fairly high levels. Hopefully we'll see them trend down a little bit, but I wouldn't hold your hopes to see a big reduction at the price of rent. And my number 6 prediction is all about home prices. Now I'm going to list off here what I think is the least likely to happen to the most likely to happen. And this is all based on not having some unforeseen event like the Bank of Canada raising interest rates an additional 4%. If something like that happens, all bets are off. Least likely this year is that home prices increase by 5 or more percent. I just don't see that happening. There you go. The real estate agent telling you that not always our home prices go up. The next least likely is that we actually see home prices decline by more than 10% year over year. And again, these are all on a national scale. We may see differences by individual cities. I just don't think we're going to see prices decline by more than 10% this year. The next two here are almost a little bit interchangeable, because I could see both of these being a realistic possibility. The second one I've got, and the second most likely, is that we're going to see a slow decline in prices, kind of a grind down, and prices end up down about 3 to 5% year over year. And my scenario that I think is the most likely is that we end up at the year in December where prices are basically unchanged year over year. But how we get there could be very interesting. We could see prices basically trade sideways all the way across, or the scenario that I actually think is more likely is that we see prices continue to decline to the spring, and then a very slow, gradual potential grind up, where we end up basically where we are today at prices essentially unchanged. Now let's give you some trends to watch, because these I think will not only give you an indication what's going on in the Canadian real estate market, but where things are headed. I mentioned it earlier, and that's the pre-construction market, and this is going to apply predominantly in Toronto, but it also applies in Vancouver and other cities. Now, what happens in pre-construction is you have people that buy these properties and they have no intention of actually ever living in them. They buy them as an investment, hope that they go up in value, and then closer to the date of possession, they will sell it to somebody else. But what has happened is that obviously prices have come down, so they're no longer investment because it's going to cost them money potentially. And a lot of these people may not actually qualify to buy them. They never actually went through and secured a mortgage. They basically put their name down and said, yes, I'll buy it. There's approximately in Toronto alone 30,000 condos that are coming up to be ready for possession in 2023 alone. I think about 18,000 of that is going to come up in the first half of the year. If we see a substantial portion of people that are unable to close on those deals, we could see a flood of condos hitting the market, potentially at really cheap prices, because people need to get rid of them, or builders are in trouble and now have to take over these units and they just want to get rid of them. The next trend to watch is immigration. The government has set a target of 500,000 new Canadians. That is double what we have brought in the last 20 years. Predominantly in Canada, we've averaged about 250,000 new Canadians since the year 2000. Now we're going to see it double that this year upcoming. Now, last year we saw nearly 1 million people call Canada home, and we saw how much pressure that has put on the rental market, as the vast majority of new Canadians will come to Canada and they will rent for a few years before they end up buying a house. So while this won't have a direct result on home prices and the resale numbers, it is going to put a lot of continued pressure on the rental market. The next trend is the regionalization of the Canadian real estate market. What happens in one area of the country is not what's happening in the other area of the country. And that's why I talked about it in my predictions. I'm expecting the prairies to have a much better market than what we see in Toronto and Vancouver. So when you see updates and they're talking about the national market, look a little bit deeper and see what's actually going on in your city, because it's likely different than what's going on in, say, Toronto and Vancouver. And I expect this regional divide to be very accentuated this year, where we're going to see probably a lot tougher markets in Toronto and Vancouver than we will see in the prairies. Another important trend that you're going to want to watch this year is the employment numbers, for two reasons. First off, the Bank of Canada looks at those employment numbers. If they continue to see the Canadian economy continue to add jobs, that's typically a Canadian economy that's heating up, and it's going to give the bank more incentive to continue to raise interest rates. And secondly, if the jobs numbers stay strong, typically you're not going to see high rates of foreclosure, because people that are employed don't stop paying their house. They're going to continue to make their home mortgage payments. So if you're expecting to see a flood of foreclosures, you want the unemployment numbers to go really high. But you also have to watch who is unemployed. We saw this in the pandemic. Those that were unemployed predominantly were younger workers in the service sector, not homeowners. And that's partially why we didn't see a huge glut of foreclosures early in the pandemic, because for the most part, homeowners continued to work. They just went home and worked instead of being at the office. The next trend you want to watch here is the delinquency rate. And this is something I'm going to continue to talk about in my weekly news recaps whenever there's new information available. Delinquency is those that are 90 days or more behind on their mortgage payments. Obviously, if you're continuing to get behind on your mortgage, you're going to have to either sell the home or it's going to be foreclosed on. So you're going to have distressed sellers. Right now, in the recording of this video, Canada sits at an all-time record low of 0.14% of mortgage holders in delinquency. That's about 7,000 mortgages. Basically nobody. If you double that number, get us to about 14,000, get that delinquency rate up to about 0.3%, that would then get us back to essentially where we were pre-pandemic. To put things in perspective, when the United States real estate market crashed in 2008, that delinquency rate depended very much on products. If you saw fixed rates, it was about 8% delinquency. And even still to this day in the United States, it's about 4 or 5% delinquency rate versus Canada's 0.14. But those subprime mortgages, that got up to about 35% delinquency rate right before the '08 crash of the United States real estate market. So watch the delinquency rate, and I'll be talking about it. If you start to see that continue to creep up, that's when you're going to see foreclosures and distressed sellers. Now, since you've made it this far in the video, you have got to what I think is the most important trend and the most important lesson out of this entire video, and that is what happens in the spring market. That I think is going to give us a very good indication of what's going to happen this year in the Canadian real estate market, because we typically see a huge surge in new listings in the spring market, but we also see a big uptick in buyer demand. The question is going to be, do we see that uptick in listings? I expect we will. But do we see the uptick in buyers, and is it enough to eat up all the inventory that is going to be added to the market? If we don't see a bunch of buyers come to the market, and I still believe there are buyers sitting on the sidelines, but I'm not sure if it's going to be enough to meet the listing supply. And if that happens, that is going to continue downward pressure on home prices. If the opposite happens and sellers don't come out and list their properties, then we're potentially having a situation where there's low inventory levels. That will put kind of a floor under home prices and stop them from sliding much more than they have already. So the spring market, in my mind, is key. That's March, April, May, and June. What happens there is going to dictate really what happens this year for the Canadian real estate market. So in January 2024, we're going to come back to this video and we're going to look at the trends identified, what my predictions were and what the expert predictions were, and see how close everybody got. Now, if you want to see how close everybody got in 2022, right here is my recap on what happened in the 2022 real estate market and looking at some of my predictions that I absolutely got wrong. As always, please like this video if you like this type of content. Hit the subscribe button if you love learning about real estate. And please leave comments below because I love chatting with you guys in the comments section. And as always, thanks very much for watching.